of contents and project team profile. So let me sum up the deal. Company is growing 49% a year, and market Selectel operates in is growing more than 10% a year, and is called infrastructure as a service. The company keeps high Capex, but also high operation profit margin and can't afford additional credit leverage. Selectel has prospects in both the geographic expansion and operational optimization, and is expected to make a big difference to softline operations and deliver value to softline shareholders. We conducted a valuation of Selectel and highly recommend softline to acquire a 100% stake for $571 million, which valued at 9.9x 2023 EBITDA, with 88% by debt and 12% by cash.
And now let's consider market overview. Both global and macroeconomic markets are recovering from COVID-19 impact, whereas Russian internet economy has high potential.
Now let's look at the world market overview. The cloud service world market is expected to have a rapid year growth of 14.5% a year, while Russian market remains to be underpenetrated and relatively small compared to the USA and the world ones. And it means that there is a field for future development. Colocation data center market will continue its growth in both number of server racks and their utilization rate all over the world. And this process will be on the back of lower market concentration, while cloud market in general is oppositely highly concentrated. Speaking about Russian market, we can admit that data centers market actually it's increasing with a high pace, and the colocation segment remains to be the largest one. However, as you can see, most of data centers are located in tier 1 cities such as Moscow and St. Petersburg and their following regions. Rostelecom holds the leadership in both colocation and cloud markets, while it's facing increasing competition by such companies as Sber, Yandex, and this process is actually driven by promising IaaS and SaaS segments growth.
Now let's move on the company profile. Selectel is leading Russian technology company, presenting preferential in St. Petersburg and Moscow, and providing cloud infrastructure services and data center services for more than 20 years or 12 years. We also can notice that Selectel is in a fast-growing stage, whereas its financial sources are efficient to maintain appropriate conditions for an effective growth. Thus, there are good growth rates in revenue and EBIT in 2026 year. Capex, thanks to Capex, Selectel is actively increasing the level of production and maintaining an optimal level of marginality.
So let's discuss investment attractiveness, and we assume Selectel is investment attractive from several perspectives. Cloud's revenue market grows over 20% a year. Company invests more than half of its sales, maintain the comfort debt leverage, and have highly effective business model. Selectel serves clients with a very much internet traffic, rises its brand requests and awareness, and is managed by skilled top management. Through all these achievements, Selectel may be interesting opportunity for several both cloud and service and colocation players, and the most desirable acquirers are Softline, Yandex Cloud, and Rostelecom.
On this slide, you can see the main details of the transaction. We believe that the most suitable buyer for Selectel is Softline. Softline is a leading provider of IT solutions. The company operates in many countries such as this region, Latin America, India, and so on. Also in 2021, Softline raised $400 million for an IPO, 80% of which the company is going to spend on M&A transactions and 20% on internal development of the company. The most optimal transaction structure is to finance 88% of the transaction with debt and 12% in cash. The main result of the proposed transaction will be a significant increase in key indicators such as gross profit, EBITDA margin, and EPS, due to the implementation of revenue synergies, Capex synergies, and cost synergies.
Our main goal was to define why Softline should become our buyer according to the Softline strategy and the advantages of Selectel. It can be said that thanks to deal, Softline can pretend on the wider IaaS market share. Softline will be able to significantly increase the share of IaaS in revenue due to the fact that 80% of Selectel's revenue is generated by IaaS and implementation of the diversification of the client base and savings through vertical integration.
So let's talk a bit about valuation and start with DCF. So we used following assumptions and operating forecast for valuation: free cash flow to firm valuation with 15.4% required return and 4% long-term growth. Selectel has strong financial profile with significant prospects in the market and is expected to increase its EBITDA margin by 9 to 10 percentage points. We used target capital structure for Selectel's closest European competitor OVH Cloud, and we recommend Selectel's management to fund their business by 14% debt and 86% equity. Due to capital-intensive business model, we give more preference to golden growth methods in DCF valuation, and negative cash flows in first years make final valuation heavily dependent on terminal value, which share extends 90% in resulting EV of $504 million. The exit multiple depends on European higher valued markets that results in a bit higher valuation by this approach. So we gave 50% weight to golden growth and 20% to exit multiple approaches in final valuation.
In turn, with regard to comparable companies approach, which appears in cloud enablement and platforms, location and European tech champions, and Go TV EBITDA multiple in range 22.2 to 24.5, and EV sales multiple in range 4.9 to 11.7 in 2022.
Roman, you are muted.
Yep, sorry. We have analyzed some M&A transactions and made the conclusion that precedent transaction EV/EBITDA multiple will be calculated as the weighted average multiples of the Russian and Western markets with weights of 70 and 30% respectively. And that resulted in EV/EBITDA multiple equal to 11.9.
We have evaluated the company using DCF comparable companies and precedent transaction analysis. The estimated at the bottom of the slide, you can see the estimated equity value and enterprise value ranges. Let's talk a little about the structure of the the merger of the two companies will increase the combined company's revenue by consolidation of client bases and customizing the customers of both companies. And also it will reduce the cost of Capex due to saving on rating data centers, and reduce the cost of employer salaries by combining two teams for the same project, and due to the difference in salaries between Russia and Europe. The total amount of realized synergies will be about 350 million by 2027.
We have analyzed various transactions and found out that the average premium, which is paid for target shareholders in the systems industry, is equal to 46% due to the high prospects of industry development. While deals synergies enable buyer to reduce its operating expenditures averagely by 23%.
Let's talk a little about the structure of the transaction. The most optimal amount that Softline will pay is obtained from the fair value of Selectel and the premium, which is equal 10%, and will amount to $571 million. This amount will be financed, how we have said, by 88% of debt and 12% of cash. It is impractical to finance this transaction as expense of shares, since offline shareholders don't agree with dilution of their own shares. With such a structure, a large debt of combined companies is not dangerous, since it is repeated fairly quickly. The EPS falls in the first 2 years, but then it grows significantly due to the implementation of synergies. Next slide. And on this slide, you can see, Masha, next slide.
Deal analysis second.
Yeah.
Yes, I'm on it.
I can see this. Okay, on the slide, you can see the main financial indicators of the combined company, in particular, the revenue structure. You can see that revenue synergies will be approximately 1% of total revenue. You can also see the dynamic of EBITDA margin and net profit margin, net profit growth. We also calculated the return on invested capital and return on equity of this transaction. ROIC is equal 9.8% and the ROE is equal 4.5%.
To sum up, Selectel acquisition will last for 1.5 years until the end of the second quarter of 23rd year, after which the synergy implementation phase will begin. So thank you very much. We can discuss.
Can we kick off questions? Gore, guys.
Okay, I can go first. First of all, thank you to the team for a very great presentation. So I noticed that you do highlight that the free cash flow, at least I think this year, was it last year and this year, or the next 2 years? I forgot one, are negative. So can you, here. So, and it's already negative, if I'm not mistaken. 2020 and 2021 were also negative years in terms of free cash flow. So how do you see this turnaround for free cash flows in 2024?
We expect that the dynamics of Selectel's investments will go below its revenue. So we see that we expect that Selectel will reduce the share of its investments due to the share of its investments as opposite to its revenue. So the free cash flow will grow.
But that depends on the transaction taking place. Does it rely on them being bought by Softline?
No, this is a model in a standalone case when Selectel operates as an independent company.
Okay. Okay. The second question, can you talk about the Capex synergies that you've identified? Yeah, 147 million of Capex synergy.
Yeah, sorry, can you repeat your question?
Yeah,
Please.
tell me. So are you saying this is how much they'll be able to save in Capex? Is this what Capex synergy, how do you define Capex synergy?
Okay, I will ask this question. Softline is going to create their own data centers, not create but built, and so now they rent this, and so they pay a lot because of rent discount, and we suppose that by buying Selectel, Softline will be able to saving about saving about 2.8 million for every 1,000 RECs due to the absence of rental payments.
Okay.
Yeah.
Okay. Thank you.
Yeah, but the main Capex synergies are coming from the discounts, is it correct? Trying to understand the distribution between the savings on the equipment and the rental, as you said.
Sorry.
Yeah. What's the fraction of the Capex synergies are coming from the discounts for equipment?
Well, if I'm not mistaken, the percentage, the share, how much we will save, the company will save by acquiring Selectel, but not renting, not leasing the data centers, is like about, I don't remember the absolute value, but it's half of the, it's approximately 25% of the total synergy.
Okay. You have the page like the merger model on the page 35, where you outline your deal structure. Can you move to page 35, 35. So where you outline the deal structure, and well, obviously there is 35. There is a very low net income. 35 страничку откройте, ребят. 35. Yeah, 35, да, 35. There is a very low net income you have for the combined company, obviously, because you have like 88% of the debt. But I mean, still, how would you so my question is, how would you account for the like business like seasonality, some potential disruptions in the business when, for example, due to some macroeconomical, geopolitical, or some other events, the financial profile of the company may change significantly. As a result, they will not be able to repay any debt, because net income will be negative. Because you see, you do not have any room in your current model for basically for the for that purpose. Yeah. So what happens? What happens if do you have probably some sensitivity analysis? What happens to the merger model when financial metrics of the company change down, so they decrease? Did you get my question?
Okay. Yeah. First of all, I want to say.
And also the second one, who do you think will gonna give you a loan at 6.2 net debt EBITDA and 5 EBITDA, 5 times net debt EBITDA in 2023?
So first of all, I want to say about net income, and we have a small net income in first 2 years after the deal because of a big amount of the deal. So and because of not implementation all synergies, we suppose that most of synergies will implement in 2024 and so on years. And so we can see that in 2024 year, net income is equal to 25, and the margin of net income will increase significantly. Then you mentioned about some macroeconomics factors. So I can't remember if we mentioned that we suppose that our analysis was we suppose our analysis made in on 20 February, and so we did not consider any macroeconomics effects as events that can affect on this transaction. And your question was about net debt to EBITDA multiple. Yes, we agree that 6.2 multiple in 2022 is really big, but it isn't dangerous. How we have said, it isn't dangerous because of fast growing of the market in which Selectel and Softline is going. This debt that companies raised for financing this structure will be repaid very quickly because of fast growing growth of revenue.
May support the answer of my teammate. Actually, speaking about your question about the net income, we were quite conservative when we create our synergies. So actually, there is also a field that the possibility that synergies will be higher. So it means that the net income will also increase as a consequence of that.
But you're 100% that they will not be lower, is correct?
Well, of course, there is always possibility, as you said, but yeah, the possibility of that we accept it as though.
Thank you.
And maybe one more thing about net debt to EBITDA. Actually, I agree with you that the multiple is high, but the thing is that the company will be able to repay the debt by its growth rate. So actually, for a few years, that high ratio is not dangerous for the company.
And the quick one, probably I'm not 100% like no question. So thank you.
Are there any questions?
Yeah, I have a question. Page 37.
Yeah, sorry, I was just trying to solve an emergency on my end, so I missed a couple of minutes on this one. I'll be more active for the next case. Sorry.
Oh, can I have the final question for page 37?
37, извините, не слышала.
37, 37, page 37. Yeah, you have the VAC calculation. I have some different page on my end, so it's a VAC. Can you open the page with the VAC calculation? Yeah, so you have where did you get the cost of debt of 13%? Just wonder.
Well, we have analyzed the cost of debt of some public companies that are peers of Selectel, and they're public, and we decided to take their effective rate of the debt, which they pay.
Mm-hmm. Okay. No questions. Thank you.
Well, we have 3 minutes more for our Q&A session, but if there's no questions, we can now move on to the next team. Okay, Quinji, thanks a lot for the presentation. Our next team today is Picasso. Please get ready.
Okay, thank you for thank you.
Okay, can you see my slides?
Yes, we do.
Okay. So, are we ready, guys?
Yes.
Okay. So we'll start. Hello, dear colleagues. We would like to introduce you a pitch book of an investment opportunity for Sber Cloud Management. It is prepared by the Picasso team, which you can see on the slide. We offer Sber Cloud to acquire a 100% stake in Selectel for 15.7 billion ruble. Selectel is a technology company that provides cloud infrastructure and data center services in Russia. The main rationale for the deal is accelerated expansion and acquisition of market share in a rapidly developing market. Now let's see how exactly the cloud market is currently developing.
IaaS market is still small in Russia. Despite the average growth of 30%, it's expecting to reach only 0.1% of Russian GDP in 2025. While in the USA, penetration of IaaS market is expected to be 2.4%. But Russian market is on its way up. Cloud infrastructure services is a quickly developing area and the main driver of IaaS in Russia. Most of the major players in the market occupy the same position, while Sber Cloud showed outstanding growth dynamics in IaaS market. Selectel is a technology company that provides cloud infrastructure and data center services. It's a top 3 player in the IaaS market in Russia. The company provides different levels of IT infrastructure. 6 data centers of the company are located in 2 cities, Moscow and St. Petersburg. The company has 48 and plans to build 22 in the future, which will allow her to become a second by size player on the market. Another key advantage is the customer base. The company has a loyal and diversified customer base of 20,000 customers with an average concentration of 23%. Its further growth in face of new and existing clients will stimulate revenue growth. We expect the company grows faster than the market due to the number of clients growth and capacity growth. CAGR will be 32%. One of the key advantages of the Selectel is high marginality, the most efficient on the market. EBITDA margin in the forecast period is expected to be at the same high level, 55%. The company aims to grow and develop rapidly, and in the next 5 years may double its capacity. Let's look at our valuation results.
Now we'll talk about the Selectel valuation. Let's start with the fundamental valuation discounted cash flows. We evaluated the company on the end of December 2021, and we expect that the terminal growth period will be reached on 9 years after 2030. And 2026, Selectel will introduce new production capacities, so depreciation until 2025 will include the old Capex. But starting from the 2026, depreciation will be charged only from new products introduced capacities. We have approximately 20 to 80 debt to equity ratio, and the WACC was calculated by 13.3%. Next, consider the sensitivity table. We assume a 4% long-term growth rate as targeted inflation in Russia. Next, we will look at trading and transaction multipliers. Let's start with the trading multipliers. First, we looked at the 3 most suitable lower bounds emerging market peers from India, Thailand, and Russia. Most comparable of Selectel to Selectel is Windcom technology from Thailand. The average multiplier for emerging markets is 7.5x. Then we looked at the developed markets peers from China and USA. We expect multipliers below 14x. Then look at the transaction multipliers. Tigrat and Avantage merged by MTS Cloud are more suitable for Selectel. Overall, we expect around 8 to 10 EBITDA multiplier. This slide shows us a football field graph of Selectel valuation. Look on trading multipliers. On graph, we see 3 comparable companies from Russia, Thailand, and China. Second one is most comparable for Selectel. Look on trading multipliers on this cloud. Those are most comparable for Selectel. In conclusion, we estimate enterprise value of Selectel in range 18.1 to 24.4 billion rubles. Dcf is lower than multipliers valuation because we have a big range in trading multipliers, because we have companies from emerging markets, and we think we have normal valuation.
Yes, now let's proceed with the buyer's choice. In fact, we consider SberCloud to be one of the best possible acquirers for Selectel. To land on this conclusion, we first examined three types of buyers: companies in the same market as Selectel, so cloud market, companies with clouds and operations, and companies that could think of Selectel as of a financial investment opportunity. First, in the cloud market, there are three main players. Cloud MTS has its own cloud ecosystem and is now developing platform as a service rather than infrastructure as a service. That's Selectel's main field. Megaphone is interested in building up its own unique network, as it had been working with Mail.ru Cloud for a long time. It's not interested in any acquisitions. Rostelecom acquired a lot of small and mid-cap companies, and Selectel is too big for that model of M&As. Other companies we considered as well, and we didn't find them appropriate for the deal. The deal with SberCloud has certain strategic implications. Here we outline the four major points, from most to least relevant. In short, Sber is pursuing fast expansion in the B2B segment, which Selectel is a part of. Acquisition of Selectel will allow it to become top 2 player infrastructure as a service and expand without a ramp-up period that would otherwise took SberCloud from 3 to 5 years to lead to significant loss in momentum. Additionally, SberCloud is currently placed only in Moscow, so it had a weak gear reservation system that will be developed with Selectel's facilities in St. Petersburg. With this being said, it might be the case that it would be easier for SberCloud to expand their facilities by purchasing new racks and other equipment from the market, instead of acquiring an entire company such as Selectel. To test this hypothesis, we model 2 scenarios. First, SberCloud acquires racks and equipment in the amount that is required to reach Selectel's capacities in 2027, after a 5-year ramp-up period of new racks. And second, SberCloud acquires Selectel and integrates it into its business. There are 2 important differences between the 2 cases: timing and synergies. First, in the case of organic expansion, Sber would get full cash flows several years later, as they would have to set up warehouses, implement new racks, and new customers for the new capacities. Therefore, the first cash flows would be negative, and positive cash flows would be already discounted. We estimate this economic loss to amount up to 5 to 8 billion ruble. Combined with the initial capex required to set up the capacities, we land on 18-23 billion ruble on what we call economic cost. Second, in case of acquisition, SberCloud could expect revenue and cost synergies, standing at approximately 4.6 billion ruble in present value. It comprises revenue synergies, for example, cross-selling Sber services to Selectel's customers, utilizing Selectel's loyal client base, and cost synergies, optimizing SG&A costs, and having to spend less capex on general infrastructure, especially buildings. In that case, after we factor in the acquisition price, the economic cost would be around 16 billion ruble. To summarize, acquiring Selectel would be economically cheaper than expanding in-house capacities. 1823 we see 16 billion ruble. This way, SberCloud could utilize the potential of a rapidly growing market without having to spend several additional years on ramp-up period, and only having to spend some time on integration of Selectel and SberCloud. Taking into account everything said before, we offer SberCloud to acquire 100% of Selectel's equity for 15.7 billion ruble, or 0.7 million ruble per kilowatt of capacities. The deal could be financed by 20% debt and 80% equity, according to the proportion of debt and equity in Selectel's VAC. As SberCloud is a subsidiary of Sber, it would be easier to finance the deal through increase of SberCloud's equity by the mother company. And we also suggest an earnout for 1 year with a gradual schedule of payments to assure SberCloud that Selectel will continue to grow by revenue and implement new capacities. Thank you for your attention. We are ready to answer your questions.
Thanks so much. Let me kick off questions. The first question I have is that you mentioned in the presentation that you have the resulting price per price per kilowatt for the Selectel of, let me see, it's 0.7 million rubles. Yeah, so how does this price compare to probably some precedent transactions or some? So how can we understand if that's like high, a low number? What is a reasonable number? Did you get my question?
Yes, I get your question. Got it.
Or whatever, like what's the reason of mentioning it here? And so just one is probably you mentioned for some reason, trying to understand what the reason is.
We just mentioned to show the price for some capacities that Selectel have. Yes, that's it.
Mm-hmm.
Like not just price for the company, but yes, and price for the company is compared, yes, with transaction and trading multiples. But this is just like information.
Okay. So it seems like the Selectel has around 23 kilowatts of power. Am I correct if I'm dividing 15 points?
That's right.
Okay, so just wonder why, and on the page 17, where you estimate the deal rationale, what happens basically is if this bear cloud builds its own servers. So it says bear cloud builds additional 45 megawatts of the capacity. So why it's much higher compared to what Selectel has right now?
Yes, it is because we want Bear Cloud to reach Selectel's capacities in 2026, when the ramp-up period will be ended. Will end.
Understand. So you project the Selectel will be basically building up their servers, and you want to. Okay, got it.
Yes.
Got it. And but still, when you estimate the acquisition cost then for the today's Selectel, do you model the projected Capex expense as well to build up this capacity to reach this base? Okay.
Yes, it is included in the model.
In the model, and where we can see the pro forma merger model.
Merger model is here, and the capacities that we use is here. Depreciation and addition to fixed and intangible assets.
Mm-hmm. Yeah. Okay. Well, let me see in detail.
By the merger model, we estimated only synergies. So cash flow statement, I think, would be more appropriate.
And fundamentally, have you considered like business differences and similarities between Selectel and Bear Cloud?
Yes, we consider differences, but only like in the framework of the market. So that is on this slide. So we think that cloud market is it is comparable, and it has just slight differences in the in the model of operations.
Yeah, I mean, I think basically I think it's important to kind of differentiate between like co-location business, where you just kind of offer servers, clients, do whatever, and the actual kind of cloud business, where effectively you're offering a full-blown technological solution, and you're not just using external third-party servers to host whatever you need. So, at least in my understanding, like Bear Cloud has been historically restricted in the amount of business that it does, specifically because it was, its core business was effectively offering quite specialized cloud computing solutions to clients as a product, right? And for example, if Cloud were to obtain 5,000 more racks, it would not actually be able to utilize them in its core business, without actually shifting the substance of the business model. So like Sber Cloud is fundamentally different from companies like, iAccelerate, Data Pro, etc., right? And the question is, to what extent is it similar to Selectel? Like, have you looked at the fundamental nature of the business?
Yes, we can see it on the slide. Teresa, please open the appendix, the second slide. So in this slide, you can see some similarities of Sber Cloud and Selectel. As you can see, as you mentioned, Sber Cloud has a supercomputer, and we think that Selectel can use its capacity and its computers and its platform to develop Sber Cloud and its rentals and computers.
Just to also follow up on Artem's question, apologies, I'm just the very last one. Why don't we just do the stage deal over the several years compared to acquiring for 100% at the time? Seems like we will be able to still integrate both the platforms, so the Selectel and Sber Cloud. Okay, we'll be able to capitalize on the potential synergies. Yet it will be much more organic compared to 100% acquisition at the point of time. So what's your view on this one?
So can you please repeat the question once more again?
Yeah. So why don't we do a staged deal? So for example, we just acquire some minority stake in the Selectel of 25%, and then we'll have an option to acquire the remaining 75% in several years, in several stages, in several years. Why do we need to acquire 100% at the point of time?
We just think that this scenario that you have mentioned is partly we have the part of good things from it with a earnout for 1 year. We think that it partially.
Why only for 1 year, not for several years?
Because at first we wanted to make it 3 years, but in Russia it is very difficult to predict cash flows. So we decided that 1 year, and regarding all the risks, it would be okay. Would be the best variant.
Thank you.
Okay, 2 questions. Since we're here on the slide, the form of financing, you already demonstrate. So I assume the debt and equity, the 12.5 and 15.6, this is the cost, right?
Yes.
But if I recall correctly, your proposal was almost 80% in equity and the rest in debt.
Yes.
So doesn't that mean it's much more expensive for Sber to do it that way as opposed to doing it the other way around, where it's 60-70% debt?
We think that this structure is the best because Sber Cloud is a subsidiary of Sber. So for Sber, it would be easier to finance through increase of its subsidiaries' equity. That's it.
Okay. And then can we go to the DCF valuation, or I think you call it the fundamental approach. So how did you do the math here? No, I think I was looking at an older version where the numbers were all negative.
Yeah, free cash flow was negative. Yeah,
that's the older version.
There's just as you can see, the numbers are the same. There is just we missed the point from the beginning, but in fact they're positive.
Okay, then if you go slide 12 here, I just wanted to understand. So here you say fundamental approach DCF, but then EBITDA 2022. What do you mean by that?
This is just implied multiple. We calculated, so we
at the year you apply. Okay.
Yes, and EBITDA is for the year 22.
Okay. All right.
So the multiple would be compared with the others.
Okay. And then that's it from my side. Thank you.
How did you calculate it? How did you calculate offered value, like a 20 point?
It is a EV. It is EV because every multiple is EV, sales EV, EBITDA. So we decided that we here will include EV, EBITDA too. And so offered value is just EV. EV, median EV for Selectel from the DCF.
It's a median. Okay, got it.
Yes.
It's okay. Okay. Do you have a PS accretion dilution analysis?
We don't. Can you please say it once more again? Analysis of
EPS. Do you have EPS, earnings per share accretion dilution analysis in post-merger model?
No, we didn't find the number of shares of Selectel because it is not close company, so we don't have it.
Are there any other questions? Okay, so thank you to the team. We'll now move on to the next team, which is the lead. Please get ready, and you may start.
Guys, are you ready?
Hello to everyone.
Maxim is here, Nastya is here, Kadir is always here.
Not yet. 1 second, please.
Yeah, okay. Yeah. Настя Косточка, а можешь, пожалуйста, камеру включить, а то у тебя не отображается.
Так, секунду.
Ага, все, молодец.
Все. Everybody, hi. Мама, привет.
Does everyone see our presentation?
Yes, we can.
Давайте.
Let's start. Okay. Hello, everyone. Today we are going to present a highly promising M&A deal between MTS and Selectel. Here you can see the members of our team named after Salvador Dali, and now we shall begin. We propose MTS to acquire Selectel to create a dominant player on the market, which will allow them to become a top 2 player. Selectel is the fastest growing provider of IT infrastructure and one of the leading providers of cloud solutions. The deal takes place on the 13th of June in 2021, and the offer price is proposed at the level of 20.6 billion rubles. The financing structure includes 75% of debt raised by MTS and 25% of MTS excess cash reserves. With the help of the deal, MTS will further develop its ecosystem and expand to regions, becoming a top 2 player on the market and gaining NPV of 5.5 billion rubles in the form of revenue, COGS, and SG&A synergies.
Максим, тебя не слышно, если вдруг ты говоришь. У меня зависло.
Да, где Максим у нас?
Какая-то накладочка, господа.
So, okay, guys, I can make this slide. So the Russian cloud services market, IaaS, behind Europe and the USA, but has a very high growth potential, especially in the IaaS segment, where you can see the CAGR of about 30%. So the market of commercial data centers in Russia mainly follows global trends, but lagging behind. And growth in demand for cloud services as a result of the transition to remote work, distance learning, age-related need, and telemedicine services. So the key customers of cloud services are financial institutions, retail, professional services, utilities, transport, and others. So next slide, please. So here we can see that the data center market in Russia has a low degree of consolidation, with the largest cloud service providers operating in Moscow and St. Petersburg. So high concentration on the Russian market will drive additional investments in UVP, development of partnerships, and increase in M&A activity. Due to the country-specific, global vendors have limited presence on the Russian market.
Okay, so let's dive in the company. So Selectel is leading provider of IT infrastructure and the fastest growing company in the domestic cloud market. Selectel has a widely diversified product portfolio that combines different levels of IT infrastructure, from PaaS to rack rental. The services are provided for all types of businesses, from individual entrepreneurs to the large companies. The company has 7 data centers in Moscow and St. Petersburg, standards from 2 to 4 tier and more than 3,000 racks. Also, company plans to build more data centers abroad. The financial position of the company is characterized as stable. Next slide, please, guys. Selectel is in phase of rapid growth. Company has high revenue growth rate, high business profitability, balanced debt burden, and active expansion by capital expenditures.
Yes. So if we conduct an analysis of the available services on the market of cloud providers and data centers offered by the competitors on it, we will be able to identify that as of February 2021, Selectel is a top 5 industry participant with a diversified structure of opportunities in the sense of services, of course, which can be delivered to the client. Moreover, it is worth to mention, case in point of MTS, Selectel service bundle overlap with missing services of possible acquirer.
Next, the list of potential acquirers, which we have considered as most interested in M&A with Selectel. We divided companies into 2 groups. First one is companies which already have their own cloud business, and other one who don't have. The companies have compared by their strategies and potential interest by existing data centers and the powers, and compared after that, and similar experience in M&A with data centers companies. In conclusion, we decided to choose MTS as the most attractive buyer for Selectel.
It's quite important to mention that MTS is developing one of the most diversified ecosystems in Russia, covering a wide range of industries, such as fintech, telecom, media, web services, and cloud solutions. Selectel will provide a great chance for MTS ecosystem further development, and Selectel will actively boost MTS projects of big data analytics, artificial intelligence-based solutions, marketing tools, and implement new cloud processes for its clients. Both companies will benefit from three groups of synergies due to the service diversification and new vertical competitive advantages. As a revenue effect, MTS and Selectel collaboration will lead to cross-sales synergies in the form of MTS cloud ecosystem development and increase of customer conversion. As a cost effect, the savings will be created by reduction in employee costs, optimizing R&D expenditures, and marketing distribution channels. If we are to speak about strategic fit, Selectel's geo-distributed network of data centers will help MTS to expand its presence in many regions. Connecting data centers of both companies will create full-cycle data providing chain of further launch of 5G, so MTS will become a top 2 player on the market. Focused on further development of its cloud and data center services, Selectel as a target will help MTS to fill in the gaps of its portfolio. In other words, the deal will result in 5 crucial factors, such as becoming a top 2 player on the market within ecosystem development, regional expansion, cross-sales effects, and creating full-cycle data chain.
So according to the basic conservative scenario, we expect that the net present value of the total synergies will amount 5.5 billion rubles. The MTS product line is complementary to the Selectel product lines, which make it possible to effectively carry out cross-sales and cross-customers. Such kind of synergy is estimated about 3 billion rubles net present value of this synergy. The key item of operating expenses, according to our assumption, will be the optimization of management and finance department expenses on staff. IT specialists will not be reduced due to the fact that it's a key asset of Selectel. The net present value of this synergy is about 2 billion rubles. We assess that the possibility of gradual introduction of synergetic effect in the next 5 years in a full volume. All this has a positive effect on EBITDA, consolidated EBITDA. The CAGR 2022-2026 year of the next 5 years is about 4%. The increase for this period about 17%. Without deal, according to our estimates, the MTS CAGR will be about 3.2%, and increase for this period will be about 14%. Next slide, please.
Okay, let's talk about cross-sales more. We know that MTS provides a wide range of business services ranging from banking to customer security. As the near half of Selectel's clients are small and medium-sized businesses, they may be interested in these services. At the same time, MTS also has a wide customer base among the B2B segment, which may also be interested in Selectel services. Moreover, MTS participates in federal infrastructure projects and provides services based on big data for the government. In the coming years, MTS plans to increase revenue in the B2G segment using the channels of already built partnerships. Selectel, in turn, will meet the demand from the state for processing and storing a large amount of information, as well as offer additional digital products. In order to encourage customers to use more services and increase the probability of customer conversion, MTS can offer businesses special sets of services with a 10-20% of discount. Despite the short-term losses from special offers, MTS will be able to keep customers in its ecosystem, which will increase revenue by 1% annually. Next slide.
We also considered some strategic goals which a potential deal will help to achieve. First one is potential combining of infrastructure. What does it mean? We suggest combining data centers of Selectel and MTS and merge them with cable internet of MTS and future 5G MTS's network, which plans to launch in coming soon. We think that 5G will be a significant driver of increased data consumption in the near future. So Selectel's data centers will be appropriate to this assumption. Deal also will move to the union company to second place in cloud market by number of racks, and Selectel's powers in region will help MTS to achieve region expansion like they want and write in their strategy.
So on behalf of the clients, we offer the following terms of the transaction. We offer to purchase a 100% in the authorized capital of Selectel for 20.6 billion rubles. Based on the financial analysis conducted of MTS, as you can see, we offer you to finance this transaction in the following proportion: 75% by debt and 25% by cash. As a result of consolidation, we take it into account the proposed financing structure. The key indicators after consolidation will remain highly attractive. So due to the synergy, the company will fully cover the interest on the debt, new debt for the deal. Taking into account the interest coverage, the remaining amount of the above synergies is 17.4% of the offer price. This transaction will create shareholder value for MTS. It's vital. Positive earnings per share growth is estimated also. Next slide, please. According to our estimations, the cost of CPM of Selectel is about 15% and WACC is about 14%. In general, the high credit ratio A from ACRA confirms this. Forecasting of indicators has based on strategic data of Selectel management, and we took into account the forecast dynamic of the market, accounting the analytical agencies. According to the DCF model, the fundamental enterprise value of Selectel is about 24 billion rubles. The share of debt is quite low in the region of 26%. By and large, the fundamental value of 100% of share in authorized capital of Selectel is about 19 rubles. Next slide, please. So the forecast period due to the gradual stabilization of growth rates of Selectel and markets as a whole. At the moment, Selectel at the stage of active growth and expansion, which is shown by the growth rates of revenue, volume of capital expenditures, and negative cash flow. After period of active expansion and the introduction of a new data centers, it's assumed that the level of capital expenditure will gradually stabilize to the volume of average market indicator. The EBITDA growth in the next 5 years will be about 5 times. The CAGR of revenue in the 2026 from 2021 is about 30%. That looks more, in our opinion, that looks more attractive than the growth of the telecom market in the region of 2 or 3% year to year of the same period. Third, the high marginality of Selectel allows generate positive cash flow in the next periods. Next slide.
Guys, I'm sorry to interrupt. We're out of time, so please make your final conclusions. Thank you.
Yeah, okay, let's move to the final football field. So in conclusion, the valuation summary can be depicted within a football field. There are weighted results of valuation methods such as DCF in both standalone and synergized versions, public comparables and precedent transactions. So according to our valuation, the offer price proposed for deal under weighted valuation approaches is 20.6 billion rubles. Thank you for your attention, and now we're ready to cover all your questions concerning our presentation.
Thank you for your attention.
Can you talk about the difference? Can we go back to that slide? So the top two, the synergize and standalone, what contributes to the additional value in the synergized approach?
Guys, can you open a slide with structure, deal structure? Higher. In this slide, you can see value creation. So it's the first slide, first stolbik. It's standalone EV, and near you can see the NPV of synergies. And we, from using our synergies, we cover interest on new debt, and the bridge show how we go to the offer equity value net synergized, and its number we took to the
Waited.
to previous slides that from what you
But is it fair to ask MTS to pay for these synergies?
Please, can you repeat the question?
Yeah, I mean, so by having 32% of weighting to this approach, you're basically asking MTS to pay for the synergies, right? Even if it's a portion of the, not full. Is it fair to ask them to pay for the synergies?
No, Selectel doesn't pay, or MTS doesn't pay for synergies. We didn't use the premium, and we suppose the fair market value for MTS is a special value for MTS of Selectel will be in diapason of DCF method and method of with synergies. We suppose it's fair.
Okay.
And just to clarify, sorry, because that actually kind of leads naturally into the question I had. Can you go back to the synergy slide, please? So it wasn't exactly sure how you calculated the synergies.
You would like to know how we calculate it?
Yeah, roughly. So like.
Oh, roughly. Okay, I make notes. So we reduct telecom services cost. I suppose the most interesting is revenue synergies. Yes. Yeah. We suppose that we suppose that we took RUP. Our average revenue per user of Selectel, and suppose that some kinds of B2B clients can be go from MTS to Selectel, since MTS pronounced that 16% of MTS B2B clients use ecosystem, and we suppose that some share of them can use Selectel products and services, and MTS also showed a figure that 31% of telecom markets also buy MTS. In this case, we reduct the amount of number of clients of Selectel on this figure. Я не знаю, на английском, наверное, не очень получилось объяснить. Ребята, помогите, если что. Почетче донести мысль. So we took a APU for MTS and for Selectel and use cross customers approach and calculate figures used by used share of market share of MTS on telecom market and the cloud markets, and how much users of MTS use ecosystem products. And we use this proportion and find maximum the corridor, the diapason of potential clients, and multiple this figure on RUP of company. Selectel and отдельно separate for MTS. Yes.
So what is that figure? So that figure is effectively a conversion from MTS to Selectel and vice versa. Am I correct?
Yes, yes. It's
so what's the figure?
Different. It's different. RUP for RUP year for Selectel is 130,000 rubles for the year. It's from Selectel presentation. And RUP for MTS clients, we took telecom clients. We suppose that telecom clients can be, it's like, sorry, I'm worried a little bit. We suppose that the majority of clients of Selectel, it is a medium-sized company, and we suppose how much staff work at this company, and we offer them to use corporate связь. Network, yes, like MTS, and we use these potential clients. It's about 61,000 clients, and use it on RUP of MTS. It's 2,000 per year, and we got this figure for MTS, and the same approach was for Selectel.
How did you account for the cost of revenues, cost of additional revenues? Do you get my question? I can repeat. Okay, so you basically say, okay, so the combined company can earn, let's say, 1 million rubles more compared to standalone businesses because of the basically what you're telling is that you are saving on the marketing expenses. Yeah, so you do not need to attract those clients externally, but instead you attract them internally for the cross sell and like this kind of like ecosystem thing. But still, there are some costs associated to those revenues. For example, if some clients of Selectel go to MTS, they pay 2,000 rubles per annum. Yes, so of course MTS OIBDA margin is around 40%. So resulting net synergies of those revenues are not 2,000 but 800 rubles. So how did you account for this?
You mean that MTS will have additional costs if more people will using his yes.
Well, and Selectel as well. Yeah, there is always a cost associated to revenues.
So
did you include it?
Yes, so we put some поправочный коэффициент about 20% of offer price. We reduct that. We suppose that it will be additional costs, and in that case, we calculate NPV, not present value, NPV of synergy. It's our assumption.
Okay. Can you continue in describing the synergies as per Artem's question? So like some base assumptions.
Саша, помогай, что говорят.
Okay, you would like us to demonstrate all the synergies, how we calculate them?
Well, just the basic, just the base, some additional base. So we just discussed cross-sell synergies. So can you? So
okay, yeah. In simple words, all the synergies can be divided into 3 groups. The first one is the revenue effect, where we have a collaboration between MTS and Selectel that can lead to cross-sale synergies, because MTS and Selectel can exchange customer databases and create a unique offer of products and services as a bundle of products provided to the clients. The second group is a cost effect, because the savings will be created by the reduction of employee costs and optimizing marketing costs. And the third group is like a strategic fit, where we can collaborate all data centers of Selectel to MTS ecosystem to create full cycle data providing chain, and MTS will benefit from this geo-distributed network of data centers. Like this, yeah?
Perfect. Perfect.
So why don't we do a deal in several stages? Why do we need to acquire 100% right now?
Because Selectel is not a very huge company for MTS in comparison. Yeah, of course. So I guess it's very easy for MTS to acquire 100% of Selectel right now.
And we offer that competitors like MTS Cloud, Plow Money in Accelerates, Gazprom Bank and Rosatom signed a contract about communication of on the process of the building on a new data centers. In this case, we suppose if MTS would like to have expansion of this market, they should buy a strong player, small but very strong and perspective player. Тут что-то говорит или?
No, I'm not looking for the merger model, and it seems like you plan to repay your debt in just 3 years. So why 3 years? Why not any longer?
So we know that current available credit funds under credit line amounts to more higher than 20 billion rubles. We suppose this purge for MTS, it's very small and in compare with their credit line, available credit funds on the line. We know that we longer money, less than чем дольше, тем лучше. But we suppose that sorry, they create enough free cash flow to cover debts and maybe to expand others market shares and others. Не знаю, как на английском сказать, сложно было объяснить.
And what's the interest rate you assume on that?
We saw that interest rate of MTS that they show on their investment presentation.
Yes, what's number?
Two different, but we took the. Can you please open the slides? Yeah, there. You can see at this slides the source and the notes, and this figure. 5.3, it's the average market interest rate after tax. It's market rates that's published by central bank, and we suppose it's basic scenario, and of course it's when company.
So you say that the MTS is being funded at around 5%, like 6% before the tax?
Before это там цифра была, да, 6.6, 6.9. So it's a market value. We don't have your MTS, yeah. We don't have your inner documents, inner covenants of your credit lines. We don't know it, and we suppose that it's just approximation. It's just our assumption, and we suppose yes, the figure will be lower in real life. No,
the figure will be even lower for the debt.
Lower to the date 30. Вот эту дата на 30.06, не сейчас.
So you said.
It's very important to mention that we live in the universe at the 13th of June in 2021, yes. Where the key rate of central bank in Russia was about 5 or 6%.
It's a figure from Bulletin of Bank Statistic average market interest rate for not financial companies. So and we don't know the covenants of MTS credit lines. It's for us, it's not available information. And we took market price for the debt.
Any other questions from the jury?
Thank you for the very interesting questions. Thank you.
Thanks, Dali. Our final team for today is Shishkin.
So, bye.
Ready?
Bye.
Thank you.
Good luck to the next team. Good luck to the next team.
Okay.
Thank you, guys.
Okay, can we take a 2-minute break, please? Just
Sure.
quickly. Okay. If the other judges don't mind.
Yeah, I completely support this one.
Okay, thank you.
Ой.
I'm back.
Okay, shall we continue? Everyone's ready?
Let's probably wait for Artyom as well. So good to go.
All right, let me share my screen then. Yeah, please let me know whether you see the presentation.
Yes, it's all right.
Okay. Good afternoon, dear colleagues. Today, our team would like to present you with a solution to the M&A case in data center industry. Initially, our task was to find a buyer for Selectel, and we decided to choose Contactia as a potential buyer. During our presentation, we will cover such aspects as brief information about Selectel, market overview, deal rationale, valuation of Selectel, and eventually the overview of the transaction. On this slide, you can see team members, but unfortunately, Shoh will not be able to present his solution. We suggest to consider VK as a potential buyer of Selectel for approximately 45.1 billion rubles. Our target Selectel is one of the largest players on the Russian IaaS market. The proposed transaction aligns with both VK and Selectel strategy, which results in realization in several synergies. We use trading multiples, Precedent Transactions, and Dcf Analysis to estimate fair value of Selectel business. Our advisory proposal to VK implies purchase of 100% stake, being financed with 80% of debt and 20% of cash. Deal is accretive with 7.6% EPS accretion in year 2023. Now, Zahar will proceed with the information about Selectel's business and market overview.
Thank you, Didar. Selectel provides cloud and colocation services. The company's products include bare metal and private clouds, public clouds, colocation services, and other services. For example, CDN. Company generates 88% of its revenue providing IaaS services and 12% by colocation services. Moreover, Selectel is one of the top 3 players in the IaaS market in terms of racks and is also #1 in bare metal cloud segment. Selectel is a fast-growing IT infrastructure provider with 13 years of history, more than 20,000 customers, and 6 data centers located in Moscow and St. Petersburg. Selectel is a financially and operationally stable company that has a high credit rating for A. The company's forecast revenue will be more than 25 billion rubles due to the integration of new data centers and scaling up current capacities. By the second quarter of 2024, the company will complete the construction and integration of a new data center in Yulovsky, which will double the current capacity. So there is market overview. Globally, the cloud services market will grow at CAGR of 16.3% and reach $814 billion in 2025. The IaaS market is about 10% of the total market. Major players is the Microsoft, IBM, Amazon, Oracle, and others. Cloud database adoption has increased by 50% in 2020, up from 10% last year. The IaaS market in the world now stands at $44 billion and will grow up to $75 billion by 2025. Banks are the main client of IaaS service providers. The IaaS market in Russia is at a developing stage. Respectively, the annual growth rate is 27% according to EKS Consulting. For comparison, the market size in 2021 in the world amounted to 23 billion rubles, and in Russia, 117 million rubles. The following companies are leaders in the segment in terms of revenue: Rostelecom, Sber Cloud, MTS Cloud, and Selectel with a combined share of more than 50%. The IaaS market in the Russian Federation has a number of drivers. Firstly, companies began to switch to remote interaction with customers and employees, and widespread digitalization of processes is being carried out. Secure clouds will be more in demand in order to be compliant with the federal law. Moreover, the state will allocate 2-3 billion rubles for the development of IaaS and in accordance with the digital economy project. Selectel's main competitors in the market are Rostelecom, Sber Cloud, and MTS. Rostelecom occupies more than a quarter of the IaaS market and has the largest capacity. Sber Cloud entered the market relatively recently and is just starting to actively expand. MTS has a small capacity but still ranks third in terms of revenue in the market. Geographically, data centers are located mainly in Moscow, 71.5%. There is a trend towards the construction of a data center in St. Petersburg, as there is a more favorable infrastructure and companies seek to diversify their portfolio by geography. I would like to pass word to Didar, who tells you about acquire and deal rationale. Didar, please.
Thank you, Zahar. So PK is a leading online ecosystem with a diversified portfolio of services, which includes business unit engaged in hosting VK Cloud solutions, And the main divisions of VK are engines in communication and social, games, tech, and non-operating products. More than 50% of the shares are in free float. The main controlling shareholder in terms of voting shares is MFT. It's Gazprom Media. From the point of view of the debt burden, VK is financially stable. In the previous 3 years, it had a net cash position. In 2019 and 2020, net debt to EBITDA is less than 0.5. VK Cloud Solution occupies approximately 2% of IaaS market in terms of revenue. The transaction will allow VK to receive additional effects to its activities in the form of cross-selling, business expansion, and capacity scaling. The product portfolio will be diversified to suit any needs of customers, including more than 20,000 Selectel customers. VK rents a data center, so it may have problems with the infrastructure and the economy of scale. Due to the transaction, VK will become the owner of 7 data centers with a potential number of racks in the amount of 8,000. VK will take the 3rd place in the IaaS market with a total share of more than 10%, and will also have access to the Uzbekistan market. In terms of synergies, we have spotted 3 main areas where they can arise, leading to the positive economic impact, being equal to approximately 250 million rubles per year. Hosting costs that contribute around more than 50 of our overall estimated synergies are based on the assumption that VK will be able to use Selectel's excess capacities as well as moving to its existing capacities from third-party data centers to Selectel. The second important synergy is related to labor costs, which contributes approximately 30% or to overall synergies and arise from filling the needs of hiring new personnel with existing employees of VK. And after analyzing marketing flow of both VK Cloud and Selectel, we found out that approximately 10% of their channels that are used to promote cloud services. Now, George will proceed with the evaluation of Selectel's business. George, please turn on your micro.
Oh, yes, sorry. So yeah, talking about valuation, let's start with Dcf Analysis first of all. Our main assumption here was the introduction of new data centers and consequent attainment of 85% capacity utilization rate, apart from achieving the effect of scale. Our enterprise value is estimated to be roughly 44 billion rubles with implied EV/EBITDA multiple of 13.7x. And using EV equity value bridge, we arrived at the equity value equal to approximately 40 billion rubles. We use discount rate of 15%, which is calculated via a table on the right-hand side. And according to our analysis, EBITDA is expected to grow at around 38% annually following the introduction of new capacities, which is planned by the company. For the sensitivity purposes, our final enterprise value fluctuates ranging from 39 to 49 billion rubles, depending on our weighted average cost and long-term growth rate assumptions. Next method we used is Precedent Transactions. We selected transactions for the last 3 years with a value of not being more than $1 billion. Besides that, target companies were selected only from the industries and with a business profile which is similar to Selectel. As we can see, median EV/EBITDA multiple of 16.3 is slightly higher than the implied multiple we arrived at in the Dcf Analysis, which is due to the premiums that were paid in transactions amounting to approximately 10 to 15%. As for trading comparables, we decided to split peers in several groups depending on geography and business segment, but our general approach was yet again the same. We selected companies from similar industry and of relatively the same size, as well as financial performance compared to Selectel. And after calculating average multiple for the 3 sets, we can see that Selectel's implied multiple is pretty close to the mean value in regards to its peers. So our final estimate using trading multiples method is ranging from approximately 30 to approximately 70 billion rubles, with target price being 48.1 billion. Eventually, after applying 60% weight to DCF and 35% to trading multiples, as well as 5% to precedent transactions, our valuation range is 37 to 54 billion rubles, with target price being 45.1. Now let's briefly sum up the overview of the transaction. Talking briefly, the price for 100% stake in Selectel is valued at 45.1 billion, which is alternatively 13.9 multiple over EV over EBITDA in terms, over EBITDA. Closing the deal will enable Contacti to exercise synergies and have its EPS accreted significantly over the next 3 years. We are also assuming 80% debt and 20% cash consideration as the financing structure, as this will minimize the total acquisition cost for VK and will let Selectel receive actual cash for its business. Also, the proposed structure will not break financial covenants in the future years and ensures Contacti has sufficient cash balance for working capital purposes. Thank you for your kind attention, and we will be glad to cover your questions related to our analysis.
Thank you for that presentation. A couple of questions. So I think in one of the slides you do mention that this is a non-core business for VK, right? You talk about social media, gaming, etc. So why do you think it's worth VK's time, resources, etc., to go into a non-core business when most businesses, in some cases, try to get rid of non-core businesses and just focus on, their bread and butter?
Okay, thank you for the question. Colleagues, if you don't have any objections, I can answer. Move to the slide previous, please. Acquire, slide of acquire. So we did not mention that their VK Cloud as a business unit is not core business unit, because VK is developing this business unit now due to the drivers of IaaS market, as we have mentioned before. And now VK Cloud Solutions have partnerships with educational organizations like High School of Economics, like Financial University, and we decide that this segment will be will have more priority in the next few years. And as we see, VK have asked the state, our state of Russian Federation, to find him a supplier of service because there is a lack of it and shortcomings. So
okay, and how does the margins or the profitability of the cloud business compare to their other segments?
As we see, the cloud solution has doubled its revenue, and as far as I remember, in their 2021 year report, the net profit was about not doubled, but 30% higher than in the previous year.
This is for the cloud business specifically?
Yes, because VK is a holding which had a Mail.ru corporation and also a cloud division for online gaming and so on. And if we are suppose that the divisions of online gaming and cloud will be not split, but will be unified, because now VK is developing cloud gaming solutions also. So it will be like a consolidated department, and there will be a higher margins of net profits and operating profits. So
okay, thank you. Okay, last question. Sorry, did someone want to say something?
It's okay.
Yes. I want just to add that VK may pay attention to buying Selectel because in order to increase its margin and profitability, he can become the owner of the Urlovsky data center. It's one of the largest. It will become one of the largest data centers in Russia, and by acquiring its item, Urlovsky data center, VK can increase the impact of economy of scale, because it's one of the most economic items in data center market, because commercial data center market in Russia is highly concentrated, and more than 90% of data center of all number of racks are privately owned by large business or medium business. That's why it's very hard to rent racks nowadays, and to increase the impact of economy of scale.
Understood. Okay, thank you. And then can we go to the valuation slide, the football field?
Okay, Didar, please. And so you can answer the question to this section.
So what weightings did you apply? Here, 60% DCF. Trading mode. Okay. Can you go to the DCF page, please? Do you have the actual model where you?
Yeah, you mean DCF model? Yeah, right.
Yeah.
Let me see. It's somewhere. Yeah, here it is.
Okay. Okay, so then you just rely entirely on 2026, right? Because all the cash flows in the interim years are negative.
Well, generally, yes. Our cash flows comes from year 2026 and onward, taking into account terminal value, because in years 2022, 2021, 2025, we assume huge investments in capital expenditures due to the introduction of both new racks on existing data centers and the building of a new data center, Urlovsky, which is supposed to be one of the largest data centers in Russia. So it requires a lot of capital expenditures, which we modeled in our financial forecast.
But then can you explain the dynamics of the free cash flow line? So in 2022, it's, what is this, 8 billion rubles, right? 8.2, and then it goes down. Well, I mean, it goes up and then it goes down again and then up again.
Yeah.
Can you please switch to slide number
15.
42?
Which slide? So 42
yes,
or?
Yes. And I think that's it's uneven dynamic of, we can explain this uneven dynamic of cash flow by looking at the structure of electricity cost and revenue structure, because when we add some new racks on the new data centers and completely new 300 racks in Urlovsky data center, the utilization rate for different racks, it's slightly different. It's slightly different because of different tier level of the data centers. For example, when we add our Urlovsky data center, we should take into account that it's tier 4 data center, and in order to maintain its profitability, we need to add more. We need to add more SG&A costs, and utilization rates for different racks for different periods are different, because in order to maintain utilization rates stable at 75%, we need some years. That's why our cash flow is positive only in 2025 and 2026, I think.
I also want to add, please, 15, appendix 15.
Appendix 15.
So there's a different dynamics in free cash flow because there is we introducing new capacities mainly in 2022 and 2024. You can see there is about free 100 racks and 1,000 racks, new racks, we mean. So, and it's what explained the dynamics of free cash flow to firm.
Yeah, so basically, if we move back to the DCF here, the reason why actually the free cash flow in 2022 is pretty low, just because the capital expenditures, we introduced 1,000 of new racks on existing data centers. Then we follow with the introduction of new data center itself, as well as new racks in the new data center. But on the other hand, what actually compensates is the new income, which is generated by the racks which are introduced in the previous period.
Yes, and furthermore, when we add new racks, we can't implement benefits from economy of scale, because the power usage effectiveness ratio per year is very low, is very high. That's why electricity costs on some new data centers will be too high, and that's why our cash flow will be negative.
And just to continue this line of questioning, have you benchmarked your kind of resulting valuation versus the actual cost of building the capacities which you're buying? So, you know, in terms of like per megawatt multiples or per rack multiples, you know, it seems like a large portion of your valuation is effectively, you know, NPV of new future capacity, which as the model shows, you're basically building anyway, you know, starting from this year, next year. So basically you're paying for capacity which does not yet exist, and you're kind of paying for it upfront from an NPV standpoint. And the actual, you know, when you look at the valuation which you're paying for the existing business, you know, versus how much it would cost to buy an equivalent amount of capacity, have you kind of done that analysis on what the actual implied premium may be?
Okay, I think.
So what's your understanding? Like, what's the cost of building 1 megawatt of IT capacity?
Could you show our price per 1 megawatt in model? I think it's in operating expenses.
No, I believe we don't have it in appendix, but I can tell you the number we used for capital expenditures per 1 megawatt is $6,000. We also, yeah, like we don't have this number in the appendix. Yeah, so the expenditure per 1 megawatt was $6,000.
Per kilowatt, probably, right? Not per megawatt.
Yeah, sorry, per kilowatt. And as our model was based on the racks, we transferred this number to capital expenditure per rack, which was about $12,000. So talking about the space which is required for the construction of data center, it was, let me remind, well, we used cost per square meter, which is approximately 175,000 rubles per square meter, which is public information statistics for year 2021. And as the square meters of the new facility, it will be, so yeah, it will be around 7,000 square meters of the total area introduced.
Mm. Yeah, so I think basically the main question is whether, you know, why you think it is justified to pay such a huge premium upfront for this asset. So I think 6 million per megawatt of IT capacity may be about right. as an order of magnitude figure. So Selectel currently has just a bit over 20 megawatt of actual capacity, right? So that would be like, to build effectively what Selectel has now would take about 120 million. And obviously some time, so you can't just go spend money and just get the asset right away. But in a nutshell, the IT capacity which Selectel already currently has, is worth, at your own estimate, at cost 120 million, and you're proposing to pay over 600 million for it. So it's a multiple of about 5 times to Capex in what is very kind of Capex intensive business. As an alternative, VK could just go out and find EPC contractor to build 20 megawatts of capacity for 150 $200 million maybe. So why do you think it's justified to pay such a huge premium upfront?
Okay, I can answer him. Thank you, Artem, for your interesting question. And we have several reasons why there's such valuation. Firstly, we have built the new regs, and it also affected our valuation mainly. But you can say that VK can build its own data center, its own servers. But as far as we all know, it can't do it now because mainly VK operates in Moscow. There's a huge density, and it will be kindly difficult to find right place to build a data center. And also there is a shortage of service and infrastructure details. Moreover, the Selectel has an entry in new market, Uzbekistan, which will affect our revenue synergy. So I think VK will not pay only for infrastructure of Selectel. It also will pay for other costs like finding the right location for data centers, finding the suppliers for service, finding for suppliers for X and customers, and so on. Selectel has a really amazing growth rates, and it doubles from year to year. So we can conclude that there's not only capital expenditures affects our valuation to be such high.
Yeah, also to add one more point is that we forecast, and based on historical utilization ratios, we forecast utilization of Selectel's regs at being around 75%, and taking into account that Vkontakte will be able to use these excess capacities of 25%, or let's say conservatively 20%, will also add up to the value that can be paid for the business.
And just one add, VK expense on hosting is now about 843 million per annum. So, and this capacity can be fulfilled in Selectel infrastructure because, as Georgi has said, our utilization rate 75%. So there's additional synergies which VK will get from this deal. We also can show our slide, please, Appendix 17. It's
Tim, I'm being cautious really of the time because one of the jurors will need to drop off shortly.
Next.
So let's complete the Q&A and then we'll be discussing it.
Okay, thank you.
Yeah, okay, thank you. Thanks to the teams. Now our jury will take a break to discuss and to determine the winner. So let me open the rooms and please accept invitations to the rooms. Thank you.
Thank you.
Yeah,
thank
thanks.
you. And I assume we're waiting. Okay.
Jenny, please invite students back here in this room.
Yes.
We are ready to announce.
Great. One moment. Okay, our judges
Okay.
ready to announce the result. Yeah, please go ahead.
Super. So let me kick off. Artem Abdullah will also comment. So teams, many thanks for your for the today M&A case. It's a great honor to be there, and it's quite. I mean, it's obvious that everyone did a great job, both in terms of materials, in terms of the presentation, in terms of the in terms of analysis, and well, you all tried, did your best to actually present it in the best way possible. So applause to everyone. I'm quite sure that it was a great pleasure for all the teams to be involved in the M&A case. So in terms of the winner, we'd like to announce that the winner is team Dali, which is MTS. So let me just applause. I'm I'm not sure if it's here because I have a microphone, but guys, you're winner today. But it's very important to say that it doesn't mean that other teams were like didn't do a great job. No, guys, you did. We actually just had a very complex discussion among the juries, because we just really cannot decide who is the winner. So, but kind of like trying to measure some minor points, and Dali resulted to be a winner. So what we did like about the Dali? Well, probably first of all, it's a deal rationale. MTS seems to be a logical buyer, very large scale buyer, and in terms of deal rationale, Dali seems to be like a step ahead. We also enjoyed the Q&A session, but it's still would be much appreciated not to hear Russian words next time. So try to speak in English at all times. That would be great. Also considering you have some English speaking persons. Overall quality of the materials were also quite good. In terms of some points for development, and we're gonna comment on other teams as well. Probably it's for me, I wrote it down. It was kind of like a low interest rate for the debt financing, so it was a little strange. Also probably some recommendation for all the teams, and we had quite a lot of questions today on this topic, is synergies. So be very careful with the synergies, special revenue synergies. How do you estimate them? What conversions do you have? Also try to always build sensitivity tables on the synergies, because I mean there are. I myself work in the industry. We did quite a lot of analysis on this one, and I mean there is a huge gap between estimates and reality. Okay, and the synergies. So this is extremely important. Artem, do you want to add something on the Dali?
No, I think you summed it up quite nicely. So, I mean, again, everyone, great job. It was really kind of a tough decision. It was not kind of initially unanimous, and it took some discussion. So, yeah, great job, everyone. I think, all cases were definitely well made. As a general point, mentioned by Andre, like I think it's important in our business to pay for things that actually exist, and not to get too carried away and making up things that you will that will be created in the future using your own resources, and not to pay for them too much, because that's how you end up overpaying in the end. But yeah, I mean, great job all. And, it was an interesting experience.
And maybe I can wrap up here. So I don't want to repeat what my colleagues already said. I completely agree. It was a tough decision, and all of you did an extremely good job. Maybe just a few pointers in general for me. So what I usually like to see on investment committees when we're trying to make these decisions is to be punchy. So first of all, make sure each slide doesn't have like 7 or 8 key messages. It's too much. If it's more than 3, maybe 4 max. And for each slide, make sure you know what the takeaways are and you can hit them right away. So be as punchy as possible. And I know 10 minutes is not fair for such a case, but still, you guys did a really good job. And yeah, I think that's just in general, that's the only point I'd like to make. The rest my colleagues covered. So once again, congratulations to all of you, and thank you for your time.
Okay, thank you again to the judges and to our finalists. Have a great weekend, and thanks for the final.
Yeah, congrats everyone.
Thanks
You all
everyone.
did a great job.
Thank you. Thank you.
Congratulations to the thank you to the judges, thank you to students, and officially you are our graduates. Have a great weekend. We will meet you in a few weeks.
Спасибо большое преподавателям, организаторам. Вообще, на самом деле, это очень классно, что есть такая возможность, то есть получить знания, и очень не то, что как в вузах преподаются очень много воды, прям супер профессионалов, выжимки самые. Это очень дорого стоит, и сколько вы времени на это тратите, вот менторы наши. Спасибо вам огромное, просто человечески, вот, пожалуйста, воспримите, это мы очень благодарны. Это...
Главное, чтобы было полезно. Вам спасибо большое. Еще увидимся, ребят, на связи. Пока-пока.
Всем спасибо. Удачи.